Hi everyone, it's the Swanky Markets with the outlook for Monday the 5th of July. For those of you that live in America, happy Independence Day to you all, and I hope you're all enjoying your holiday weekend. NFP on Friday was very strange, not a lot of movement, not a lot of volatility, not what we're used to anyway. I suspect this is because of America's 4th of July celebrations. The other reason that I've come across was it maybe already been priced into the market with all the movement we had last week, which is very true. It could easily have been, but very strange. Tomorrow we could see a lot of sideways movement, or price will just go nuts, one of the two. I will be concentrating on emails, administration work, things like that, and unless something screams at me, I will not take the trade. The only trade I can find so far that I really like is the dollar Swiss, and I'll come to that in a minute. At different times of the year, guys, different trading methods work better than others. Sometimes you may find that harmonic trading works very well, sometimes VSA trading works very well, sometimes pivot breaks work very well, EMA touches, etc. At the moment, trading off fib levels and EMA touches are working extremely well. Those of you that are new to this business need to learn that a trading technique that works today may not work well in 2 or 3 months' time. The markets are always changing, and we need more tools in our arsenal, in our toolbox. So I'm going to show you some fibs. I've shown you EMA touches, and I'm going to show you some fibs. This is the New Zealand dollar on the daily. We all know about that. I had a loss on that last week. I think you all know that. This is the 78.6 of the fib. Now, if the daily had closed above here, it would technically be in a reversal, and it would be in an uptrend on the daily chart. This is the downtrend. Then it came up 78.6, tried, couldn't break it, and has now come down to the 38.2, and it's now pinging between the 38.2 and the 50. So we'll just wait for a break of either one of them, and we'll be looking to trade there. I wouldn't be taking along, not with all these EMAs at the moment, right here on the daily. So that is the New Zealand dollar. If we go to the pound dollar, you can see the price is right at 78.6, which is a critical level. I've talked to you about this a few times. It is pinged right off it. You know, the Bollinger Bands are open, the stocks have crossed. This is showing that it should go up, but until it closes above here, price is technically still in a downtrend. It is very near resistance, so you will leave it alone. If it breaks and closes above, then you may take the long, but then just above we've got an EMA touch, and price will short off of that, and you should get a good 70-80 pip move out of that short. So be very careful on that. But if we look, you know, price may hover around here, price may let me move this over. Price may hover around here, and then just may come back down again, or it will break, one of the two. But it is very near the top. And we can see the price was here, the 38.2, then respected the 50, broke above, pinged right off the 50, and it has gone up that way. This pair likes fibs. Swissy likes fibs. This is the yen. As we can see, this is the bottom. Price came up, pinged through to 61.8, came back down, bounced off the 38.2, couldn't break above the 50, then eventually closed below the 38.2, came back up to test it, and has now moved away. And now it's on the 121.4. So that is another one you need to look at. The Aussie yen. Let's have a look at the Aussie yen. If you look at the fib on this pair, the bottom here is 71.86. Price then came back up and tested the 50 here, eventually made its way up. As you can see, fib levels 38.2, came back down, 23s around there, came back up to the 50, pierced it, and it's now gone all the way back down again. So, you know, you can see the fibs do play a big role in trading. And some traders will only trade off fib levels, and they tend to do very well. It is something that you need to learn, and it is something that you need to be aware of, fib levels. And it's not only on daily, 4 hours, hourly, fibs all work. This is the Swissy. Okay, let's go to the daily first, and we'll go through this. As we can see, price, we know this here is the weekly 55 EMA. This is the daily 365, the daily 200. Price had a hard time breaking through here. Just below that we've the 78.6, which price has broken through. So this is technically now reversed, and it is technically in a downtrend. Alright, so if this pair wants to go up, at the moment I will only take half lot sizes because I'd be counter trend trading. Shorts, full lot sizes because I'm going with the trend, because it has broken and closed below 78.6. Now this is for me at 10772. Now if price was to pierce that tomorrow and come up around the 10800 level, I would be interested in taking a short. Alright, and then I get a lot of emails on my stops. Now you need to risk only between 1 to 2% of your account. Now if you risk a percentage on your account, not a fixed money amount, is good money management. So you need to work out what 1 to 2% of your account is, whether it's 1%, 1.5% or 2%, whatever your risk tolerance is. And then you work out your lot size on that. Now you work your lot size out on the size of your stop. So if I'm going to take a trade here, a good level, I've got the 365, I've got the weekly 55, which should now provide resistance, and I've also got the 200, and that is at 108.59. So that means I would have to have a 59 pip stop. Now the way I would work that out, if price closes in here, that would be what I call my catastrophic stop loss. And what I mean by that is, should price just shoot up, I am protected and I will not lose more than 2% of my account, because that's where I work my stops out of. Some people like 1%, that's fine. Do not go above 2%. If price is to close in around here, then I will just manually get out of the trade if it closes there. What I would do is I will look for 10800, and that is where I will place my stop. Now if we go to the monthly and I blow this up here, now don't forget what I showed you last week on the monthly on the euro. We have a pin bar reversal on the euro dollar. We know these two pairs correlate. Not correlating as much lately, but they're still correlating a lot. This pattern here is known as train tracks. This is a very, very bearish sign right off this trend line. This pair, where is it heading? Well, this pair I should now be heading for 09937 if we look at the monthly. And if you get in at 188, that could be an 850 pip move. Could be. Now you lot all know by now how I like to trade. Let's go to a weekly. I like to get into a trade. I like to take a third out after 20 to 25 pips. I like to take a second third out of 40 to 50 pips. I have my stop at break even, and I like to leave the other third run with a trailing stop. And then if it turns into a big move, I tend to scale in to the trade. So therefore I don't need a trailing stop anymore. By scaling in and scaling out, that will automatically tell you where your stop loss is to break even, which moves. I have a spreadsheet that will do that for you. If anybody wants that, just email me, inquiries@swankymarkets.com, and I will gladly forward it to you. So this is it on a weekly, and you can see it's very, very, very bearish. Our Bollinger Bands are opening, stocks are down, MACD is lower. It's the same on the monthly. If we look on the monthly we just looked at, stocks have turned. This Bollinger Band is just turned up here. We'll have to see what happens. It's pointing down here. MACD's lower low as well so far. If we look on the daily, we can see the Bollinger Bands are wide open, stocks are level, MACD is lower. So we just have to see what way it goes. If we get back up to 0800 tomorrow, I am interested in that. And then if we look at the EMAs, they're all braiding and they're all crossing. So tomorrow we might have a lot of sideways movement, or else it's gonna do the other thing. But America's off. And I will speak to you tomorrow night again. Anybody, and if you're living in America and you're celebrating the 4th of July, I hope you have a lovely, lovely holiday. I'll talk to you later.